Hi folks, it's Silver Dave at local Silver Mint in Ware, New Hampshire. And today I want to answer a question that I get asked very often. And that question is, why silver and not gold? Why silver and not gold? We're going to answer that question right here in this video, so stay tuned. All right, folks. So as you know, we're here to answer this very important question. I'm Silver Dave. We're a local Silver Mint, Ware, New Hampshire. And so the question was asked to me over the weekend at a conference, and they said, Dave, why silver? Why not gold? And so, great question. And I'm going to answer that question, and I'm going to just focus on my top two main points first, because there's 100 reasons why I would say silver and not gold, but I'm just going to give you the two main reasons. Okay. And I'm not saying that gold is bad. I'm just saying that silver is better, at least right now with the current conditions. So here we go. Why silver and not gold? The first reason, silver potential gain. With silver, I think that there is a higher percentage gain potential. What I mean by that is that if you were to own $1,000, let me change that number. If you were to own $10,000 worth of silver and $10,000 worth of gold at this time, I think that your dollar valuation will go up by a greater percentage with silver than with gold. I love gold, but right now, when the silver price is around 1/100th the price per ounce of gold, I think that silver is a better value, and that silver is largely underpriced and undervalued. Now, why do I think that that might be? Well, if you were to look on the commodities futures trading, right now the commodities futures traders are selling 375 ounces of silver on paper for every 1 ounce of silver produced. And so, comparatively, they are selling 130 ounces of gold on paper for every 1 ounce of gold produced. And so, based on those numbers, you can see that the silver market is papered over 300% more than the gold markets. And when there is so much paper silver in the marketplace to the tune of 375 to 1, that means that it appears in the marketplace that there's 375 times as many ounces of silver as there actually is. And so what it does is it makes it look like there's a lot more silver out there than there is, and it dilutes the market, because the more of anything that there is, assuming that it still has the same usefulness or intrinsic worth, that the more of something there is, the less each one is worth. A great example would be dollar inflation. Dollar inflation is essentially more dollars in circulation. And the more dollars that exist in circulation, the less purchasing power each one has. The more of them there are, the less purchasing power. So it's simple. So right now, it appears that there's 375 times as much silver in the market as there actually is, which tells me that there's a silver price explosion that's eventually going to come. And so with that being the case, I see silver as offering more percentage gain potential than gold. The next thing, spendability. If you want to buy stuff like basic essentials, if you want to buy a basket of vegetables or a dozen eggs from your neighbor down the street, or a box of bullets or some basic thing, well, I think you're going to have a much easier time doing that with silver than with gold. With gold at around $3,500 an ounce, your common increment of gold is 1 ounce. And so spending $3,500 at a time, that's a lot. To me, gold you would use to buy a house or a truck. But if you want to buy basic essentials, to me, silver is going to work better because it's already in smaller increments. And so it's going to work better for that. If you went to Mexico and you brought only $100 bills, well, you're going to overpay for almost everything. Having that divisibility is really helpful. That's why I especially think it's important to have a portion of your stack in little pieces of silver that you can trade for goods and services. And so having a portion in little pieces for the divisibility is extremely important. But ultimately, I think silver is more spendable than gold. Now, if you have gold, I wouldn't trade back and forth. I would just hold what you got. But I think right now silver is a better buy for those reasons that I mentioned. Now, there are some reasons why I think gold may be useful in certain applications. And so I would usually recommend silver. But let's say a guy has $100 million that he wants to put into precious metals. Well, $100 million worth of silver is going to fill this room. But $100 million worth of gold is in a box that you can still fit in a really good safe. Hopefully you have a really good safe if you have $100 million in gold. So if you have a huge amount of wealth that you want to put into metal, it might be easier to do it in gold, and because of gold's compact, high value nature. So there's a place for it. But to me, silver is more of a currency. And I think there's a lot more advantages to getting silver. But if you need to put $100 million or more, then you should call us. Let us be the ones to sell it to you. But in that application, you might do gold. But I might still say, build yourself a walk-in vault and buy silver. Might still be what I'd recommend. But you're the customer, you choose. So that's why silver and not gold, potential gain percentage and spendability. Now, the other thing I wanted to talk about, because we were here and we're kind of talking about some of these other things, I thought I would just share with you the 4 fundamentals of money. Now, there's different versions of this, and I noticed that more recent versions of this have removed intrinsic value or intrinsic worth, which I think is the most important one. But I think that they removed this because they knew that Bitcoin doesn't work with that. So they got rid of that one so that Bitcoin would work with the others. Because Bitcoin, we're going to talk about it in a second. I'll explain why. So, but I think this is the most important one. So here we go. 4 fundamentals of money. Relative scarcity. If you picked sand or soil as money, the problem is there's like a million tons of it in everyone's backyard. So relative scarcity is really important. And so, for example, at one time, seashells were being used for money. But then, and they would carve them into cups and make things out of them. But then a big hurricane came and washed up a bazillion seashells onto the beach. And then everyone had so many of them that no one wanted more of them because they had more than they needed. So relative scarcity is very important. Gold and silver, very scarce. It takes a lot of work to get that silver and gold out of the earth. Durability, very important. The money needs to be durable. It means that if it dissolves when it touches water, or if it shatters when it falls on the ground, it's got to be strong and durable so that it can be passed back and forth for hundreds of years. So durability, very important. Divisibility, very important. Silver, gold, and copper can be divided up into little pieces, big pieces. It's very important to have that divisibility. And so, something that wouldn't be divisible would be like a truck. It would be hard to use a truck as money because it would be hard to pay someone with half a truck or a quarter of a truck, because really the whole truck needs to be together for it to work as a truck. So though it may have a value, it's not really a good money because it's not divisible. So divisibility, very important. And lastly, intrinsic value, or also intrinsic worth, same thing. Intrinsic worth is the usefulness or the value of something to keep. Very important. It means that not just is it useful to trade for other stuff, but it's also valuable to keep. And silver and gold are widely used all around the world in many different applications. And I'll just give you an example that silver is so widely used that more than 50% of all patents in the US Patent and Trademark Office involve silver somewhere in the design. That's right, more than 50% of all patents in the US Patent and Trademark Office involve silver somewhere in the design. So that's a lot. And everything from our phones, our computers, our cars wouldn't work without it. Even our clothes would cost a tremendous amount more if not for the automated systems of mass production that have little silver parts in them and that are necessary in order to produce these items more efficiently. So silver and gold are valuable because of their usefulness as a material to make stuff out of. And so that's intrinsic value. Unfortunately, cryptocurrency has no intrinsic value, meaning it has no value to keep it. Its only value is to trade it for other stuff, which I've heard Warren Buffett describe as the greater fool theory, which is that you're going to be able to trade it to a greater fool, and that's how. I'm not a big fan of cryptocurrency. I like things that are actual. And also, when something is described to me as a tool of freedom, but yet it makes me dependent on 5 things: a phone or a device, electricity, an app, internet, and internet access. Note, internet and internet access are 2 different things. Internet, the existence thereof, and internet access is your ability to access. And so cryptocurrencies make you dependent on all 5 of those things. Go figure, all 5 of those things are things that the global power elite control. What a coincidence. So, thank you folks for watching this episode covering why silver and not gold. I'm Silver Dave at Local Silver Mint in Ware, New Hampshire, and I want to thank you for watching these videos, and I'm going to invite you to like and or share our videos. Also, please subscribe to our channel, ring the bell notification to be notified when new videos come. Theoretically, we're not sure that YouTube is actually notifying people of our videos. We actually think that maybe like they don't like us, but maybe they'll like us a little more. YouTube, please, can you tell people of our video and not shadow ban us, please? Anyway, but if you'll do it anyway, just in case, thank you so much for watching, folks. And I'm Silver Dave, reminding you to stack it up.